In this video, we're going to document a day in the life of Wilson Parker from Parker Eckersley Developments. We're here at this new facility you've got here, mate. Absolutely smashed it. I mean, we just did a podcast earlier this year, and the fact that you've gone from working in your house to now working here, pretty impressive. Like, can you talk a bit about like the businesses that you run and what you plan to do, sort of thing?
Yeah, I suppose a bit of context to who I am and where I've come from. So I've been investing in property now 4 years, coming up to 5 years. It's gone like that as well. It's gone really quick. Started off doing buy-to-lets, buy, refurbish, refinance, and I've been doing that part-time for the past, I was doing it up until the end of 2023. Then I went full-time into property investment, where I was sourcing deals for clients down in London mainly and overseas. Yeah. And then in April this year, I set up a construction company. I've always liked doing refurbishments and seeing projects through from start to finish. And it's also another avenue which I can generate money from. Yeah. So we're doing residential refurbishments, refurbishment for investors, refurbishments for my clients. So that's where the construction company came from. So yeah, I do property investing and property sourcing, building up my own property portfolio as well as building those for clients. And then I also run the construction company, which is growing quite rapidly over the past few months, particularly, hence why we got the office. We
spoke a bit off camera about setting up your own, having your own office space.
Yeah.
Do you think that's quite important for, starting a business and getting away from your house, for example?
Yeah, and I mean, it's hard to quantify the actual return on investment from just having an office, but what I have noticed since I'm actually moving into this office, a lot of things have taken off, shall we say. So I've got an awful lot busier on the construction side. The property investment side's at the best place it's ever been. Bought one myself last week, buying another one in a couple of weeks' time. Got a few going through for clients, and it all seems to have come together with the office. So I always like going out of my house, shall we say, and going to a place of work, which is why I wanted the office in the first place. But it also allows us to employ people. So I've got an assistant that works with me now, and then I've also got 4 or 5 lads that work in the construction company. So that certainly, we wouldn't be in that position if we didn't have this office now.
So you got yourself and then 2 business partners?
Yeah, in the construction side, yeah. So there's myself just doing the property investing, building up my own portfolio and property sourcing. And then there's myself and my 2 business partners in the construction side, who help out with the project management and things like that.
So what's the plan today then, Wilson?
Yeah, so this morning we're going to go to a couple of projects which we're currently working on for a couple of our clients. This afternoon we've got a couple of viewings for our hands-free clients, and then we've got also a couple of calls with different people, one with an investor, one with the guy who does all my marketing for me, and then one with a guy who is opened up a lending facility for myself. So we've got quite a variety of things going on today. Yeah, so this investor has just sent me over the reservation fee now. So we're working on a bespoke basis to take an upfront reservation fee. This guy came from a Google ad around 12 months ago. I actually sourced a property for his friend, and then his friend referred me on to him. So that's how, and he's just signed up for another property. So I sourced him one towards the start of the year, I think it was April time-ish, and now he's just sent me the reservation fee over for another. So I'll just give him a quick call because he's just asked me to give him a quick ring. So
hello.
Hi mate, you alright?
How you doing, mate? You okay?
Yeah, good, thank you. Are you?
Yeah, all good, mate. Thanks for calling.
No problem at all. Yeah, I've just received the payment.
Nice one.
Yeah, I appreciate that.
No worries, mate. Perfect. So yeah, I was just thinking, man. So we've got. So you know what we did last time, which worked out fundamentally, because that's kind of been our approach this whole time.
Yeah.
So how do we take this to the next level in terms of investment?
Yeah. So I think
especially if we can get some money together, because one of the partners has got some money, so we might be able to just basically take it off him, give him a loan back separately anyway. So if we've got the money, how do we do this to make like a decent move out of it? So,
so
what are you thinking? What can we do?
It depends. I mean, the first thing is, I suppose it'd be good to know how much you've got, to play with.
So we're talking, look, entry level. Mm-hmm. I need you to give me some guidance on what I need and what an entry level, next stage sort of investment will be. Yeah. That's what I need to know, because I don't know how it would work. Of course, I can sort the financing out from my side, because I can do the mortgages and I can do the bridging if that's what it needs to be, but we might not even need the bridging principle, right?
Yeah. It's a lot easier. It's a lot easier without the bridge. I'll be honest, just because the bridging fees eat into your profits.
Exactly.
But a good start for 10. Let's say if you wanted to do a buy, refurbish, refinance in and around me, I mean, you're probably going to need about 140, to be honest with you. I think if you're doing it cash, that is, just because you've obviously got to buy it, refurb it, refinance it, and all the other associated costs plus my fees.
Exactly. Yeah.
You've obviously got.
Are we thinking what we find a house for about 100k? You think?
Yeah, that's it. Yeah, so you find a house which is a bit cheaper, which needs work and to add value to it, whether it's through a refurb or extra bedroom or whatever it may be. But then we can find one which is obviously in need of adding value, and then try and get it slightly below market value, renovate it, and then refinance it at a higher price.
Exactly.
That is one route, but obviously it comes with added complexities. You know, with regards to the buy to let, it's relatively straightforward, I would say. Whereas this, you've obviously got trying to find a house is a bit more difficult, just because not as many properties work. And then you've also got the full refurb, and I mean, obviously I can do that for you. There's not an issue with that.
Exactly.
But then it's just another option. What I think would be good is if you could just let me know how much money you've got that you'd be willing to invest, and then I can put together a few different plans for you, because there's a few different things which I'm thinking. Because instead of that's one option, but there's also a couple of different options as well, which I can put in front of you on a spreadsheet that I've put together, which might suit you.
Cool. Yeah, so exactly before you start actually looking for houses.
Yeah, that's it. Yeah. Yeah. So but I've got the reservation fee, but then we can. So do you know that target criteria sheet that we had signed last time? We just amend that. We just amend that to suit what we're going to be looking for this time.
Yeah, makes sense. All right, cool. Yeah, so just hold on to it anyway. But yeah, let me speak to the boys and see what we can kind of get together, and then we can go from there.
Yeah, no problem, mate.
All right, nice.
All right,
cool.
cheers. Thank you. See you in a bit. Bye.
Wilson.
Hi mate, you alright? How's it going?
I'm good, mate. Are you?
Yeah, good, thank you. You're dropping that, what's it called, off today. I don't know if it's been delivered or not, but I might be a bit late to the boat. But he's not got a transformer, you see, to bloody power the thing.
Right. If I'm honest, he'll be out all day, him now, that driver.
Yeah, right.
Honestly, mate. I mean, can we? Is tomorrow morning all right?
Potentially. Leave it with me, and I'll send you a message over.
Perfect. Obviously, it's a mooch that as well.
Yeah, it is. It's not on doorstep. Yeah.
It's miles away, so I mean, I don't know if he's dropped it off yet, but he has. We've got a full page. If we're not too busy.
Nah, it's fine. I understand it. I appreciate it. Anyway, it's my fault.
Is that alright, Wilson? Sorry, I hate saying we can't, because
that's alright.
How we operate, but
it's alright. No problem at all.
So, do you want us to get you one out tomorrow, or are you going to let me know?
Leave it with me. I'll let you know in the next hour.
Sound alright, mate. And if you need to, you can, like you say, you can always call down to, you know, our Manchester depot.
Yeah.
I'll send you the address now, and your lads can have a look at it and see if it's worth it.
Yeah, no problems. Alright, mate. Thank you.
Cheers, Wilson.
See you in a bit.
Bye.
Bye. So that is for a refurb which we're doing, which we're going to now. He's got a breaker, but he's got nothing to power it with. So I was trying to get something down there so that it's like a transformer box. But yeah, we've not got anything there, so I'll try and sort it out. He doesn't need it today necessarily, but at some point. Hi Sam, how are you?
Yes. Hi, good?
Yeah, good, thank you. What it is, I've secured a property this morning for yourself. The only thing which I'll need from you, which I should have asked for prior, is just proof of funds, for the deposit as well as ID.
Okay.
Just so then I can send that to the estate agent and we can get it taken off the market. And then I'll put the investor pack together for you this evening and send it over to you to be looking through, if that's all right.
So you need my bank statement for the proof of funds for deposit?
Yeah, that's it, just for the deposit, just so then the estate, it's not for my benefit whatsoever, it's just for the estate agency, just so then they can take the property off the market, and ID.
And the passport,
Yeah, just passport. If that would be great, if you could send that over to me via WhatsApp, and then I can fire that over to the estate agent, we can get it all sorted.
Okay, will do.
Thank you. So this is one of the refurbs we're doing for a client of mine. With the aim of selling it actually. This one's a flip. So towards the east side of Manchester, in what's called Glossop at the minute, Hyde. and there's quite a few issues, as you can see. As we'll go through, I'll explain to you in a bit more detail what's going on. Secured it for 152, 40 grand refurb, worth reported. That's a rewire, new boiler, trying to save some of the plaster, but new kitchen, bathroom, outside, front as well. We're literally on the second week at the minute, with the aim of selling it for 240, so there should be a 20% profit in it roughly. So we've done the first fix. So we've done the first fix electrical stuff, as you can see. First fix electrical stuff, so you can see on the floors there, as well as the first fix plumbing. So yeah, this is the kitchen. See it here, what we're doing, there used to be an old back door there. We've bricked that up, locked it up. We're just making that window opening a lot bigger to let some more sunlight in. And then we're having kitchen units all the way around, with a little breakfast bar there. That's the plan for in here. And then we're keeping that window, just tidying it all up. Fridge, sink, oven there, extractor going outside.
How long do you expect this will take?
Probably about 8 weeks.
Yeah.
Yeah, so we're on the second week now. We completed the rip out, done first fix plumbing, we've done first fix wiring, and we started last Monday, what we're on now, Wednesday, so it's been 8 working days. So we should be on to plaster by the start of next week. There used to be a big media wall all the way along here, so what we need to take this wallpaper off, skim the property throughout and plaster it where it needs to be, and things like that need sorting out. But yeah, we'll be skimming it, plastering it, depends on what's needed. Out the back, this is a bit of a shithole at the minute, right? Just because obviously we're pulling everything down, so there's an awful lot of stuff out here. We had like loads of garden sheds, all sorts of bits and bobs. And we're just basically going to be landscaping it so it looks a lot nicer with some decorative stone.
So have you got any tips for project managing remotely?
Yeah, so there's a few different things. First thing is the planning stage is key. 100%. Once you've got your plan in place, then you're on to a winner. So we use a project management tool called Asana. We basically schedule all the works, we'll pile it in there, everything that needs to be done, rip out, first fix, plumbing, electrical, plastering, second fix, bathroom, kitchen, etc. We pile it all in there, and then we create it into like a Gantt chart, which will give you a flow of how long each job will take, and then you can rearrange things. So then what you can do is you can start to book in trades. So we use subcontractors, say for the bathroom. We do a bit of plastering ourselves, but on this one, no, we're doing this plastering ourselves, but we can subcontract out, say, the plastering on another job we're doing. So we can book those in before the refurb's even started, so it's one continuous project then. Instead of having, right, I need an electrician, phoning up an electrician, and then he can't come for 2 weeks, which is a delay. You get everything sorted first. That's the first tip, and then the second one would be 110%, which is a bit difficult, but to get some good guys around you. So obviously with APL and the stuff that we do, it's all in-house, and the guys that we've got working for us are spot on, and all the subcontractors we've used, they're tested on different projects. So we've got a really good team, and it means that we can speed the process up, and ultimately the more that we can do, the more volume again that we can do, the more money that we can ultimately make. So as you can see, we're on to the second week here. We've ripped out most of it. There's a few bits and bobs, but we've first fix plumbed it and first fix electrical all within 8 working days and ripped it out and ready for plastering next week. That's some going. That's not bad going. It's the 2 bedroom semi-detached. We're just fitting the bathroom, so we're already on with the bathroom. We like to put our bathroom in straight away. As you can see, we're just doing the tiling at the minute. So what we're doing in here is we're having a separate bath and shower. It's a pretty decent sized room. But the clients chose those tiles, which I like, and then we're tiling it throughout as well, just to give it that. I mean, it's a bit extra to tile the floor and tile all the walls. But once it's done, the finish will be spot on. So when you're selling it, you don't have any issues and people looking at the finish on things, because ultimately you might spend a bit more, but you'll make it back when you're selling it. That's what I think anyway. So when it comes to property investment and the construction side of things, the profit margin is relatively low in compared to sourcing. But what it does give us is that when somebody comes to me, so we're doing a renovation over in Newton the Willows, which is pretty far away from here, but he came to me, the landlord, he already owned the house, and he was thinking about selling it, he was thinking about renovating it, and then we also offered him the assisted sale. So it's about giving the client more options. So I said to him, we can buy it off you, we can renovate it for you and you can pay us, or we'll pay for the renovation as an assisted sale. So there's just more ways of monetising it. Otherwise I wouldn't have monetised that, because ultimately he's paid us to do the refurb, So he would not have accepted our offer on the house, and he didn't want us to pay for the refurb. So I've monetised it by having the construction company in place, and then he's paying us to renovate it. So we're just making money on that as well. So it's ultimately about having as many options as possible when it comes to solutions. Yeah, that's it, being a solutions provider.
So the property that we just went to view, what are the numbers on that then?
So the numbers on that, I've not put an offer forward yet. It's got slightly more work than what I thought. It would have been good if I could have secured it at say 115 to 120 and done the refurb at 15,000.
Yeah.
With an end value, so we'd be using the 25% mortgage, the client that I'm thinking about. And then the end value at the end of the 2 years when he remortgages is around 155, 160, which I think is conservative. They've had others that have sold for that much already.
Yeah.
So I'd give him a decent return through the monthly rental income for the first 2 years, and then the aim at the end of the 2 years would be to refinance and then go again. Plus save up a bit of his own money and then try and build a portfolio that way. So the figures would have been say 115, 15 grand refurb, hopefully end value 150, 155, potentially a bit more.
Yeah.
But it's on at 125, offers in the region of, and I think, to be honest, it's going to need a bit more of a refurb.
I think so, mate. I think more 20.
You're getting up to 20,000.
It depends on what spec you want in it, really.
Yeah, and he wants to do it to a good spec, so I'm probably going to.
Like you say, you've got your own bloody trades, haven't you? So
that's
everything
it.
Much cheaper.
Much cheaper. That's it. But still, things cost money nowadays. It's not cheap for anything at all. Materials expensive, even though we get it at like trade price. They're paying good tradesmen, which we've got. Again, that still costs us money. So I'm thinking around 105, around that sort of figure. I'll have to run it through the calculator that I use, but around 105, 20 grand refurb, and then hopefully
good deal.
Refinance.
I'd buy it, definitely.
Yeah, that's the plan.
If that's what the GDV is.
I just need to double check that. I mean, when I'm doing my due diligence on properties, I always do, like I said, a few minutes, 5 minutes here and there. But then before I put in an offer, I like to go through it in a bit more detail and just make sure that what I'm actually putting in is right.
Yeah, of course.
This is Wilson. Martin, who's telling you about Martin.
Nice to meet you, mate.
Hi, mate. How you doing? You all right?
Yeah, good, mate. Good, thanks, you.
Good. Yeah, good. Thank you. Not bad at all.
So I'll just run through sort of what I've had conversations with both of you, Martin, Wilson. So I've explained the business model, Wilson, to Martin, and you've said that you've got some others on the go, haven't you, Martin, with the assisted sales?
Yeah, I'm seeing a hell of a lot of them at the minute. A hell of a lot of assisted sales.
Yes, it makes sense.
I was just explaining to Wilson what you'd said yesterday about it's probably better to pull down the whole facility rather than in bits and pieces due to the interest.
I mean, it's entirely up to yourself. I mean, but the difference that you'd, for instance, if you didn't use the full facility, and you said, well, actually, we need 120 grand of this. Yeah. And obviously you paid it back early, and then you had the 50 grand. It's kind of 6 and 2 threes, really, mate. I mean, we can stage it down for you. But say, for instance, if say you took 120 grand now or 100 grand now, and then you took the rest later on. I mean, for the interest rate and the amount, it depends on what you want. If you want quick access to money, take it all. Sometimes it takes about 2 or 3 days. Say if you said, Martin, I need to draw down an extra 20, 30 grand. Yeah. But it's entirely up to yourself, really, mate. Yeah. It's entirely up to yourself.
That's it. I mean, I've got one property which I've secured, which is 45 grand, like that, straight away. Yeah. And then there's a lot more in the pipeline. So I've set up I was just speaking to Carl about it. There's this estate agency not too far from me, and they're big enough as well. They've been in the game quite a while, and then I suggested this on a different property which I didn't get in the end. But the owner of the estate agency rang me up and he said, look, I really like this model. Benefits us because they charge a percentage so they can get paid more at the end. And they've got enough volume going through. It's not like they're just doing 1 or 2 sales a month, they're doing quite a lot of sales. And where they are, it's quite a nice area which lends itself to an assisted sale. Plus they want towards the start of the year. But I'm also pushing it quite a bit more now, and I'm thinking the next bottleneck that I've got is the lending side of things. And it seems from, let's say if I was to draw down everything on day one and pay back 225,000 at the end, that's right, isn't it? Am I right in saying that?
Yeah.
Yeah, say if I was to...
Well, yeah, essentially, yeah.
Then I could do 8 potentially of these projects and make minimum 15-20 grand a go in 18 months.
To pay for itself, hasn't it?
Yeah, so that's it. So I'm just thinking to myself, the way that it works then, so the 172, roughly, I'm just talking rough figures here, yeah. Let's say that's what I get as a net loan.
Yeah.
If I take that from day one, and then in 18 months' time, the amount I have to pay back is 225 or something like that.
Yeah.
And then that's the maximum amount of interest I can accrue if I take it all on day one. And then
absolutely max.
Yeah, and then anything, let's say if I took 100 now and then 70 later on, it might adjust slightly, but you're saying that it might not make a massive adjustment.
No, I mean I'll work out all the figures, but it's probably not going to make
a huge difference.
A massive amount of difference on 70 grand, if that makes sense.
Yeah. No, I understand that. I'll have to think about that.
And then
side
obviously
of things.
sitting in your bank, you're accruing a bit of interest as well. So by the time, kind of obviously it'll not be amounted the same, but yeah, it's probably the difference of about 1%. Yeah, you're looking at maybe 0.5% a month.
Yeah. Right, so let's say
just talking.
Yeah,
no, it's alright. Just talking, Martin, about you know at the end of the 18 months.
Yeah.
Could you reapply for a new facility on the same property? Do you guys do like renewals and stuff like that?
Yeah, you can.
Yeah. Because I'm thinking.
So that's what we're saying. If you can sort of have that pot sort of, I said obviously there'd be application fees and stuff like that to pay.
Yeah, so kind of like pay back and then go, right, well actually 2 months time, actually I want to do that again kind of thing.
Yeah, just so he's basically got an endless pot of money.
Yeah.
To
because the thing is, I'll be honest, I won't be giving this money back, I don't think, up until the 18 months, because it doesn't make sense for me. I want it as long as possible and as much as possible.
Well, the beauty of it is as well, mate, it gives you a lot more time, gives you a lot more freedom. And as I said, if you've just got that cash sitting there, and you think someone comes up and says, right, well, I need an agreement put in place in a couple of days, mate. Money goes to my bank, there's my bank account, there's my money.
That's it, that's what I'm thinking. Now,
I was saying the car, we're seeing loads of these now, but the issue that a lot of people have is they don't have the money. They don't have the assets in the background to raise the money on. But you've got that, so you're in pole position. A broker rang me the other day, and he didn't explain it properly, and then I kind of went, is this an assisted sale? He went, I think so. And well, is he going to own the property? I went, no. I said, well, how can we secure against property he's not going to own? So we physically can't do it. But you're in the kind of, you are in the position, not kind of, you're in the position where you've got that asset there, so you can raise money against it and then just go, right, bang, right, next, bang, next, bang, next.
Yeah. That's what I mean, that's what makes sense to me.
How long do you normally think it takes then, Martin, to get the facility set up?
As quick as lawyers and surveyors can go, mate.
Yeah.
I mean, my quickest bridge I've done here is 4 days.
So can you talk us through the end-to-end process of actually acquiring the investor stock and then how you actually find the deals and then sell it on to the investor?
To the investor, yeah. So first step is marketing, trying to generate the leads. Of course, you want as many good quality leads as possible. At first, I think that some people sometimes get stuck in just trying to generate as many possible leads, even if someone, say for example, wants, I don't know, commercial to residential and you're trying to sell them a buy-to-let, it's just not going to work. So you want the most amount of good quality leads. I do Instagram, Facebook, LinkedIn and TikTok. I do Facebook groups, LinkedIn groups, business and property. I also post 5-6 times per week to my own social media, and I also do paid ads. So on the organic side of stuff, I work with my assistant, she records it, edits it, and then posts it all for me to a schedule which she comes up with. That's almost all outsourced now, which is great. She's spot on at that. And then I use Martin Clay for my paid ads. So I spend about £1,200 per month on paid ads to try and generate leads. And the more that you do the paid ads, the more that you learn what's a good quality lead and what's not, and you can actually tell Facebook and Instagram what's been a good quality lead, and they try and find it for you. It's way over my head, the technology. Yeah. It's crazy what you can do nowadays. Yeah. So over time, the leads get better, and obviously you start getting referrals and things like that, which is good. Referrals are probably the best form of lead, just
word
because
of mouth.
Word of mouth, proven. It's almost like they're ready to go. So then once the lead comes in, my assistant will then give them a ring. So literally just a 5-minute phone call, first of all to make sure that they answer the phone, and then second of all that we're going to verify that they do want something that I can source and that they're ready to go within the next few months. If they're not, then we'll just put them onto a recall list for say 4 months down the line, and that's all done in my CRM, which is Podio, which links to my paid ads. So she will give them a call. If she thinks, sounds suitable, then I will have a call with them on the phone, normally around 15 minutes, get to know each other a bit more, get to know again if what they want is what I can find for them. And then obviously go into it in a bit more detail. If they've got any questions with regards to my company and myself and what I do and the process, I can speak to them about that. If they're happy with that, we then jump onto a Teams call, which is about 45 minutes long. So this is like the onboarding call, as I call it. You've got what I do is I'm based in Greater Manchester, so I show them a Google My Maps of Greater Manchester, which highlights all the areas where I invest, why I invest there, where I think that the next lot of capital appreciation will be through regeneration plus fundamental statistics, plus also just with my knowledge of the area. And then I run through a couple of properties, one that I found for an investor and one that's one of my own, to give them proof that I'm actually doing it for clients and building my own property portfolio up. And at that stage then, if they're happy to go ahead, fingers crossed they are, I will then send over to them the initial invoice, which is I split my fee, let's say if it's 4,500 plus VAT, a third. So it's a third up front, a third once we say I'm happy with the property, and then a third once we get the keys. Once we've actually done, I'll just step back a tiny bit. Once we've done the onboarding call, we go through a hands-free reservation template which details the fees as well as what I'll be finding for the client. So then that will be detailed in there, as well as an NTA, NDA, and I'll need to see their proof of funds and ID for anti-money laundering checks, just to make sure that they've actually got the money to buy the property. Never had an issue with that so far. You never know what can happen in the future though. Plus I also need the proof of funds and ID for when I do secure a property. If it's through an estate agent, they want to see it. So let's say everything's been signed, reservation fee's been paid, I'll then go out and find them a property. Now I've got 90 days to do it, and if I don't find them anything within 90 days, then they get the money back. But I've never had to do that because I only sign myself up to things that I can source. Now once I've found them a property, normally takes around a month, I would say. Again, it depends on how many clients I've got signed up at a time, it depends on how busy I am. It's normally around a month. Once I've found the property, whether it's through an estate agent or direct to vendor, I will then put in the offer on their behalf, speak to the estate agent about it. A lot of the agents in my area already know what I do, so they ask me, is it for yourself or is it for a client? In this case it's for a client, say for example, so I'll send across their proof of funds, their ID, and I'll secure the property on their behalf and take it off the market. At that point, once it's been secured, I know that the client should want it really, because it's exactly what they've put in their reservation template, so it will match that. And then I will jump onto the call with them with the investor pack that I put together, which is basically an information pack which details all the information on the property, pictures about the area, the figures, refurb costs, comparables, all the information you need to know. We'll jump onto a Teams call with the client, run through any questions they've got. If they're happy with it, which 99.9% of the time they are, never had an issue with the first property I've actually given to a client, just because it matches exactly what they want. That point then, if they're happy to go ahead, they will then pay the second fee. So the second of the third fee is then due. We'll start the conveyancing process. They can use my mortgage broker and my solicitor, and then we'll go through the conveyancing process. Fingers crossed it goes smooth. It doesn't always go smooth, but it's one of the parcels of deal packaging. It can be a bit of a nightmare at times. Fingers crossed it all goes through all right. We then get the keys. I will then manage the refurbishment for them with my construction team, whether it's a light refurb or a heavy refurbishment I should say. We'll put them together a project management plan of when the actual work will be done, so they can forecast how long it's going to be until they've got potential to move a tenant in. Once the refurb's been done, I will then speak to my local letting agent who manages all of our properties at 6.5–7%. Depends on how many properties she's got with that particular person. And then she will market the property on Rightmove, Zoopla, find the best tenant for the property. We'll get a load of applications through, fingers crossed. I have done one of our recent ones, got 64 enquiries on it within 3 days of it being live, and over 27 applications for the property itself. So you've got a big pool of people there to choose from, which means that ultimately the client, or my client I should say, is going to have the biggest pool of people to try and choose instead of just maybe picking from one or two. So then hopefully everything goes smoothly with that, pass reference checks, all the checks that the letting agent does. We'll move the tenant in and I will help with that process for the client to try and create a hands-free process, as people call it. And at that point then the property will then just be let and managed moving forward. And if there's any maintenance issues, normally what happens is the letting agent just gives me a ring and we fix it, because obviously we've got the construction side of things.
So what would be like an example of a deal that you'll source for an investor then? So hands-free service. Yeah, so for my hands-free service, I like to say to people to have a minimum of 43,000. You could get cheaper, but you don't really want to buy in a shithole area. You want to buy in a decent area. So you're looking at around 43 to 55,000 pounds as a window, shall we say. You've got the properties which are a bit cheaper, but might need a bit of a heavier refurb. Again, you could be spending up to 50,000 pounds. So say for example, something that's £100,000 needs £13,000 spending on it ish, plus stamp duty, getting up towards 50,000. Or you might get something which is a bit more expensive, towards the £150,000, £160,000, but it needs hardly any refurbishment whatsoever, then it's ready to go. So there's a real variety of purchase prices, but the figures can sometimes be similar, around 50. And it depends on what the client wants. Now if you're say buying a property which is around 120,000, you can almost bet that it'll do 750 to 800 on the rent. Up towards 150, 160, you could be talking 950, 995 on the rent. Rents have gone up, but purchase price have as well. So there's a real variety, I suppose. You can go more expensive, but it's not the norm. So for your first deal then, obviously you had no track record, anything like that. You've only started this business really a year ago. So that first investor that worked with yourself, how did you kind of overcome any objections that they had? You know, the first few that you had, just to say, you know, how can they trust you to deliver on your promise? That's it. So the first investor I ever signed up, I remember it vividly. Feels like it was only 2 minutes ago, but it was just over 12 months ago now. It was like in June, I think, of 23, on the sourcing side of things. And he actually signed up with another company based over in the northeast doing serviced accommodation. That's totally opposite to what I'm doing. You know what I mean? I'm in the northwest doing buy-to-lets. So it's a different property strategy. But one thing, so the initial call, he was open with it. He said, look, I'm going to be doing serviced accommodation, I think, with them over there, or I could do buy-to-lets here with you. He said, one thing which I do want, which is making me go over there, is the monthly side of things, as in like how much you'll make per month on the serviced accommodation. Now, for an objection overcome for that, it's like you can't always necessarily win every single, or you can't always overcome every objection. So all I could do was explain the benefits of a buy-to-let, and that the capital appreciation is where the money's made. Give them a bit of a slightly different option with regards to maybe a cheaper purchase price and a higher yield. Put my options out there and said, this is where I'm up to. I've got experience doing it myself over the past few years, trying to build up my own property portfolio. And we had a good relationship. I've got to know each other quite well. We had a few calls. But in the end, he decided to go with somebody else over in the northeast doing serviced accommodation, which is absolutely fine. But what happened was, after I think it was around 2 or 3 weeks, he gave me a call, and I remember seeing his like his name coming up on my phone, thinking, why is this guy giving me a ring? You know, he doesn't really need to speak to me. Anyway, he had a slight issue with the guys over there. What they was putting forward to him wasn't necessarily what they marketed to him. So he wanted like a really nice serviced accommodation unit, and he was just getting the bottom half of a house basically. There would have been no capital appreciation in it. Then he ended up coming back to me. So, and everything that I've sourced for him has actually stayed true to what I've said. So sometimes you don't win them, but it's about the relationships as well that you build with people. That's right, and you say you don't want to work with everyone. And Can you talk a bit about how many people come in like through various lead magnets, like your Facebook ads and your Instagram and all that sort of thing? Mm-hmm. How many people come in compared to how many people do you actually work with?
Yeah, so again, you probably get quite a few through the Facebook ads and Instagram ads. You probably get the most amount of leads through there, but they're cold leads. So you're doing well if you can convert 10 to 15% of people that start actually at the top of the funnel and actually pay you the money at the end. The organic side of stuff, people have been watching me for say months on social media, but you never know who's watching you.
Yeah.
So they can be watching me for months, but then they've already built up, they feel as though they know me, so the percentage rate is a lot higher. Now I'm not sure on the actual rate myself, to be honest with you, but I just know the amount of calls that I get on with people, whether it's through the phone call or whether it's a Teams call, the amount of organic things that come through, the percentage is higher, but the leads are necessarily a bit less. That's what I've found. But no, it's alright. I just think it's good to have an array, I should say, of different ways of marketing.
Let's start with Wilson's Buys Houses.
Yeah. Mm-hmm.
So you're out the other day. You were trying to sort out your video.
Yeah. Mm-hmm. That's it. So for the direct to vendor stuff that I'm looking at doing, it went well. We went to lots of different houses, out of houses which I own and I've bought, and I amended the script, as you mentioned, to encompass just a bit more of what we talked about, and then I got that all together, and now Sam's got it to edit. So Sam's editing that at the minute, and I've also got loads of pictures with keys, but with Wilson Buys Houses top on.
Brilliant.
In front of different houses. The only thing which I need to get is more the key handover. Do you know where you maybe shake? Do you know like that picture? But I just need to do that. I need to get, say, another third party or a few different people.
Yes.
Get my Wilson Buys Houses top on and go and do that for you. But for now, I think we've got enough for starters.
Cool. Okay. Can you WeTransfer it over to me? In some
Yeah, I'll ask Sam to WeTransfer it over to you. It should be done in the next day or so. I asked her to have it edited by today, so she probably will do.
Okay. I didn't, because I knew stuff was coming.
Yeah.
On the website side of things, I thought, you know what? Yeah, we could just push it like, but I thought, well, I'm just going to go back and reskin the cat. So I thought we'll just wait to get the content.
Mm-hmm.
Push it like, so
yeah.
Brilliant. Okay. So and then also for Wilson Buys Houses with the ad side, the video that you've done, I'll have to look at that. See what the call to action is on it. What is that call to action on that video? What do we say?
Do you want me to tell you now what it was?
Yes.
Similar to, if you need me to change it, I can do. But it says, so if you're ready to take the first step towards selling your house the hassle-free way, click on the button below this video and complete the form, and I'll be in touch with you very shortly.
Brilliant. That works both for ads then and also for the website.
I was thinking that because I was thought, should I say a link or button? And I think I said button.
Yeah, we'll have it anyway. So they'll both be there, so it doesn't actually matter. But that's absolutely fine. All right, cool. No, I look forward to getting that, mate. And then obviously we can get the website, get the bits of the website, also get it mobile optimised, and then get that pushed live into your account. Get it all linked up to the Wilson Buys Houses URL. There's the automation piece is on the back end, which will be when a potential prospect vendor signs up, not prospect vendor, when a vendor signs up, they'll get some automation on the back end, sort of saying, thank you, we've got your details, this is what happens next.
Yeah.
And then also that'll go out in the form of a email and also a text message to them. And likewise as well, you and Sam will get the automations that you get in terms of your emails, your text messages, to basically get onto that person ASAP.
Yeah, that's it, because it's going to be a load more work, isn't it? That's the thing, which is fine. We're just going to add it onto the pile, because not a load more work, but trying to get through these calls, is going to be a task in and of itself, isn't it? I'm not saying there's going to be shed loads, I'm not expecting that, but just, you never know how many people are going to be signing up. They might be shit quality, they might be alright.
Yeah, I mean, and also the other thing as well, also, I think you mentioned the other day, is about, all the leads that you do get, you got to make sure that you've got your process in place to monetize where you can.
Yeah.
So, would you basically ping it on to sort of like a third party? You know, would you put it out to sort of other deal sources? You know,
that's it.
Stuff like that.
There's a lot of avenues which can go down, because you can do assisted sale, buy it, renovate it for them. If they just want to pay for renovation, which that's another avenue which doesn't necessarily work. But then you've got lease option agreements. We've got other investors, co-sources which you can use. So do you know
of course.
Andreas? I'm potentially doing one with him as well. He works a lot with the investors over towards Hong Kong, which again opens up a different avenue stream with maybe a slightly higher purchase price. Some of them I can just refer onto an estate agent and try and make a bit of a fee there, because ultimately I'm not going to win them all. I understand that 100%. I mean, even if I get 5-10%, that would be good for me. One property is all it takes, and then that's it. That sets up my spend budget for the full year, and that's the way it works, isn't it?
This is the beautiful thing about it, is that and it's something which I think people sort of initially they don't quite get, but because of basically the margins that you can get from converting one of these people into a buyer or a seller, then it puts a lot of you get a lot of revenue from that. Fantastic, which then you pump back into the business and then use it to grow even further. So absolutely fantastic.
That's it. Yeah, cool. That's what I'm hoping for anyway. I'm looking forward to it. That's it. I have no expectations at first. It's one of them we might just have to learn as we go. But eventually,
it always is, and I think one of the things that we need to be careful of when we are running ads, is one experience that I've been going through now for the past few years, is we need to ensure that we're not coming across as basically trying to basically go well below market value. The market value is going to be what you deem the market value to be, but we will be quite open and will say that we are going to be, up to market value or at market value.
Yeah, that's it. Yeah.
Yes, people.
Yeah. And I don't need a heavy discount. I'm not in it for that. Right. It's a lot more beneficial if I can, for my clients, just find them off-market properties, even if it's at the market value, but it works on the rental yield, then win-win for everyone.
Yeah.
So we only ever be able to sell it to someone, you know what I mean? This is for a client potentially who's based down in London, or myself. I'm also looking to add a few more, as I've mentioned, but yeah, it seems like it's a relatively good, a turnkey investment. That's what I'm thinking. There's a few clients that I've got signed up who wanted a bit more of a refurb, and I looked at the pictures on this and it seemed as though it's almost ready to go. There's a few things that obviously I think you should check, and everyone checks. It's good to see the consumer unit if you can find it. It is in there and it looks relatively new. It's got RCD protection on it, which is good. I'll just take a picture of it as well, just to make sure. That obviously I'm not a qualified electrician, but one of the business partners in the other business, the construction is. So yeah. Even if it's just a board change, you can do a board change in the ICR for 600 quid. It seems like it's had some money spent on it. It's got a unique ceiling, but it's one of those, isn't it? It's not necessarily. It's better than some of the properties that you see. That's not obviously the one, is it? The only thing is, it's a bit. I don't know. It's got a few marks here now, hasn't it? And the house itself. Thing is, especially where we are.
Yeah.
You'll be surprised the difference. Say, this is a mining area in and around where we are, in and around the northwest, and especially Wigan, Rintills now, which is not too far away. It's all a mining area, so you've got a lot of settlement on houses. But if you look at some of the door frames, anyone would think that the house is falling over. But you've got to be able to tell the difference between what's settlement and what's actually subsidence. And I'm not sure.
Is there anything that you look for that then?
There's the typical, obviously you can see normally cracks that start to develop in and around the brickwork out the front and the back. You don't see it too much with mid-terrace. Obviously you've got a whole row of terrace. Door frames which are out of line. Sometimes you'll see that the door casing's dropped on one side. The actual step at the front, you can have a big tilt on it. The floor inside can be sometimes a bit wonky, but that's pretty common. So as long as there's no real obvious signs, and I mean, it's good to understand a bit about the owner. If they've got a mortgage on it, then it's mortgageable, if you can do.
Oh, in terms of your investors, they wanting to see surveys sometimes?
Sometimes it's each to their own. Some of them do. I personally don't. No. I trust my judgment. I trust the mortgage valuation. they come round and double check it. If there's anything that's seriously wrong, they'll pull it up. Surveys, granted, they can be good, but I find they just cause you a fucking nightmare.
That's right, yeah.
Literally, the door doesn't shut quite right. Red flag.
Obvious.
Yeah. Red flag the electric because they can't check it. Red flag the gas because they can't check it.
Could be damp, or get a specialist damp expert. Cheers.
Cheers, yeah, and that's it. And then it turns out there's nothing. Sometimes there is, and that's it. And the whole world's falling down. Whereas on a mortgage valuation, they still do some decent checks. With this one particularly, I mean, it needs a bit of work. Could do with a bit of a decoration, I think, personally. I always like to give them up to top condition before I rent them out. There's not that much parking out the front. We've mentioned this before. There's a bit of parking down the side, but it's got a decent rear yard. You know, some of them have you can't swing a cat in some of them, so this is a bit of a benefit, I suppose. And somewhere around this, you get 795 easy for rent.
For something like this, it'd be quite simple for you to project manage because it's literally just like decoration. I don't know what the flooring's like upstairs. You might need new carpets or, you know, that sort of thing.
Yeah, that's it.
I mean, say kitchen and worktops look alright.
That's it. Units don't look too bad.
Doors, outdoors fine, isn't it?
Yeah, that's it. Decent sized master bedroom. That's what you'll often find though, especially, it's pretty typical of a 2-bed. You'll have a decent sized master bedroom, and then you'll also get a smaller. It's good if you can get a bigger than a box room, a decent sized single, but pretty often it's not that big. The thing is with this as well, the guy's still living here, so I think he's in a chain, which is a bit more of an added complexity because he's obviously having to move somewhere else, and I don't know how many people on the other side of that are in the chain. So if it's a big chain, then I try and avoid it, to be honest with you, unless it's a cracking property at a cracking price.
You're prepared to wait a bit longer?
Prepared to wait, and I think the investor would be.
Yeah.
But ultimately, it can delay things. You know what it's like as it is, with no chain it's difficult sometimes. Just trying to deal with a load more transactions, fuck that. But yeah, it's a decent size. To be fair, you could get.
I really don't think you'd need much work doing to this, would you?
That's what I mean.
Like change that carpet for like decoration, but
yeah,
a lot of it's.
You spend. In mine, I put decent carpets as well. I mean, to do a terrace stage, you're probably talking 1,500-1,800 quid throughout. If you were just doing the upstairs, obviously a bit less. But decoration, what we're talking 1,500 against $2,000, 1,500 to 1,800 on carpets, EICR gas safe, maybe a change the consumer unit. There's no obvious signs of anything that's wrong.
So you're in and out, tenanted within 2 weeks?
2 weeks, yeah, that's it, yeah. So once we get the keys, jump straight onto it, 2 weeks, get it marketed, and obviously move the tenant as soon as possible.
High quality property in it, once you stripped out.
Yeah. It's just a bit tatty, that's it.
Yeah.
But other than that, it's a good property. I do like it. It's just weighing up the parking situation and things like that, because I do want it to ultimately, as we mentioned off camera, when you're selling it in however many years time, you want as many people as possible to be able to buy it. And whether not having any parking, or if you have to park down the side street, that might cut a certain percentage off, I don't know. But yeah, I always think of these things when I'm looking for clients myself.
Yeah, but you look, if it's close to like public transport or anything, that might not need parking, you know.
That's
it.
It's
right next to train station or whatever.
In and around here you've got V2 bus, which takes you straight into Manchester on the bus route in the morning, which is what a lot of people find is happening now in Manchester. People moving out from the centre because it's quite expensive in and around those areas. To the outskirts, travelling in, or with COVID, people work from home nowadays. That's what I find happens quite a lot. So therefore more people can move out to cheaper areas and have more spending money, if you will, try and reduce their outgoings. But something like this, make a decent family.
Yeah, this will always make sense for an investor, won't it? How far from on Manchester you say it was?
No traffic, you're talking 20-25 minutes.
So
that's it, and the train not too far from here, again 20-25 minutes roughly, so depends on traffic. Well, this sort of bathrooms, especially myself, I mean, each to their own, but I fucking hate having a bath. You know what I mean? I don't want to have a bath, so as long as there's no issues with the ceiling or going into the kitchen downstairs, which there isn't, it doesn't look like anyway. Do me. Don't think there's an extractor fan. That's the only thing you could do with one.
That'll be straightforward, don't it?
Yeah, straightforward.
Would you say it's quite a good area to invest in?
Yeah, the property prices are a good value, and the main thing for people like yourselves with investors is it's the return on investment. You know, something like this generally brings £850, £900 a month. So the return on investment is 7, 8, 9, sometimes 10%. So for investors like yourself, it's good business.
Well, so a majority of your people that come to invest, they from like London out of area, really? Then?
It's a range, to be honest with you. The London market, they look at properties like this and look at the price and think, fantastic. It's they can't believe their eyes sometimes when they're seeing it like this. But you do get a lot of people locally who are obviously well up on the market who will invest in it anyway. So you get a lot of people really. I don't suppose it matters where you are geography wise, as long as the numbers fit and you're getting the right return, it works for you. Even being hundreds of miles away in London, Tyldesley works for you just because the figures are right. So
what would you say would be good areas to like kind of focus on inside of Greater Manchester, or is it
obviously you've got quite a broad area. We were just chatting then, the closer you get to the town centre, the more expensive it's going to be for you. So your returns on the kind of outskirts, if you will, so you've got kind of Tyldesley here, you've got Atherton, you've got parts of Lee as well. So those types of little towns that a lot of people might not be too familiar with, they're your kind of gold nuggets, if you will. You've got a good town centre on the doorstep, a good transport link, and places like this you'll get a good return.
I agree. I was mentioning that to yourself, Joe, is that I think that what are people doing now is obviously they're moving out from the centre. And it's pushing the prices up, but at the minute you can still get a good return on your investment. As I mentioned, the purchase price is good, rental income is good, yield is good overall. Whereas you get a bit closer towards the city centre, it's just
you're 20 minutes away by car from Manchester city centre, so really it's not a great journey, and you're saving yourself a lot of money, you see. So, yeah, absolutely.
Yeah, so I'm just driving back to the office now, and I thought we'll just stop by one of the properties which I bought myself. So I completed on this last Friday. I bought it for 125, which is actually what the owner paid for it 15 years ago. She just wanted to get rid of it. Now there is a tenant in it who's moving out shortly, but there's two properties the exact same as this which have sold for 170 and 175. So I'm just going to list it back on the open market once the tenant moves out. Hopefully just make the profit in between myself. So that's the plan. Hello. Hiya Barry, how's it going?
Hiya, alright.
I thought I'd just give you a quick ring because I've not spoke to you since, was it Friday, I think? Friday. Yeah. I just thought I'd speak to touch base with you and just see if you're still alright with everything. Any further thoughts are out?
Yeah.
What's that?
Yeah, no problem, yeah.
Excellent. Because what it is, I could do with drafting up, like a heads of terms document which just details what we've spoken about, what we've agreed.
Yeah.
But I could just do with your email address, so then I don't have it, you see, so then I can...
Has John not sent it yet?
No, he's not, you see, he's not sent it us. If you could text it us across, that would be great, and then I can draft it up and I can get it signed over. I'll sign it, and then I'll send it over to you. And then if you and Neil sign it, and then we'll introduce you to the solicitor, and then you can have a conversation with her. I've spoken to her, she's all good. To run through things with you, and then take it from there.
Alright, yeah, no problem with that.
Alright, excellent. If you could text it across, that'd be great. Thank you.
Yeah, no problem.
Cheers, Barry. Speak to you soon.
Yeah, no problem. Thank you.
Bye.
So what are you doing now, Wilson?
So what I'm doing at the minute is now I am just drafting up a heads of terms document for the assisted sale, which will be starting in a couple of weeks. Fingers crossed if everything gets signed all right. So the document's pretty basic. It's not rocket science or anything like that. It's just a basic heads of terms document which will detail how much the vendor will get, how much I'm spending on the refurb, what's going to happen with the proceeds of the sale, if it meets a certain agreement or a certain sale valuation, I should say. So it's nothing like that's too crazy. I'll fill this in. This is just a bit of a blank, well, it is a blank document at the minute, which I use for the assisted sales that I do. This then will get sent to the solicitor, which we use. You have to use a solicitor obviously that is familiar with the assisted sale approach, because a lot of them don't understand it, to be honest with you. So yeah, that's just what I'm doing at the minute now. So I'll put in all the address and figures and things like that, and then I'll print it off, sign it, and then I will send it over to the vendor for signature as well. So I'll just get up the details of the offer that I sent over on this screen here.
Who do you think an assisted sale would be good for?
Mainly, again, There's a few different people who it could be good for. What I tend to find works is on probate properties, just because they're empty, unencumbered, they don't need to sell it instantly. Whereas it could also work for people who are willing to go elsewhere and rent, because you can give them a certain amount of money up front. So it's case dependent, but I find it to work on probate properties mainly, to be honest with you. Here we are. So I've got the offer here. So the address is 246 Green. It's actually in Eccleston. Dated. That's so big. So on this one, the vendor is going to receive £170,000, but of which £5,000 is to be given up front and then deducted from the. So he's going to get £170,000 minimum, but I'm going to give him £5,000 up front just as a sweetener, just so then we've got a bit of skin in the game. Next step, the vendor, so Barry and Neil, will be responsible for the ongoing bills of the property during the sale, including but not limited to the mortgages, utilities and council tax. Now, there's no mortgage, but he will still be liable for any other bills like council tax, etc. I didn't really want to take on that, which is what we agreed. So the total debt against the property is nothing. So he inherited the property from his mother, must have been. So the next line, Wilson Parker will need to protect his capital investment of £45,000. So we expect the refurb to be about £40,000, but 10% contingency. We'll then put a first charge on the property for that amount. So then, should everything go wrong, at least I'm protected from a capital investment of £45,000 minimum. And then all sale proceeds, so we've agreed on here, just referring back to the offer, all sale proceeds from 170 up to 235. So it's a £40,000 refurbishment with a 10% contingency and a £5,000 up front. So we're taking from 170 to 235, obviously minus our refurb costs at 40, 45, let's call it. So we should profit there £20,000 from the £45,000 investment, which is just shy of 50%, and that's over, normally it's about a 6-month process. So if you was to annualise that, you could double it, because you can do 2 of these in 1 year. And then anything, 170 to 230 will go solely to myself. All proceeds of upwards of 200, so what we need, another line in here. All sale proceeds from, so what we've agreed is 235 to 240,000. Will go to Harry and Neil. Spell, that's it. And then anything above £240,000 will be split 50-50. Now there's one, the exact same layout as what we're going to change this into, sold for 236, and that was about 12 months ago with the exact same estate agency. So we're confident on our figures, but you never know where the market will be. I'm pretty optimistic that it will sell for hopefully a bit more. It'll be ready in the new year once we've finished the project. So anything above 235 will be a bonus. If we get 245, 250, we could be in to make over £20,000, because we're not paying the solicitor fees. So the solicitor fees will be paid by the vendors. Paid by vendors again. So all we're paying for is the refurbishment. we go. So agreed by myself, I'll print that off, sign it. The only thing which I may need to change is this. So I'm setting up a specific company to do assisted sale from, which I've not done yet. Agreed. These. Assisted sale.
So are you able to offer them more based on this then?
Yeah, that's it. So if I was to raise finance for 170,000 plus pay for the refurbishment, my profit would be 5 grand, 6 grand. That'd take 9 months to do, which is obviously a long period of time for not a lot of money. This way, we can start the refurb once it's been signed and once the first charge has been put on the property. And it should take us 3 months to do the refurb, hopefully 3 to 4 months to sell it. So instantly we've reduced the amount of time for buying it, and also we've reduced our money input for roughly, we might make, obviously overall we'd make less, say if we was to buy it and sell it, others in the profit, but whereas this way, we're happy to give something to the vendor just because we don't have to raise all of that money. So say for example £5,000 up front, plus there's got potential to make more than that. So it's obviously the time aspect, return on investment, the amount of capital needed is lower, and it works for them and it works for us and it works for the estate agent. They'll be making more because they charge a percentage. So they wanted 170 for it, we give them 170. The estate agent would have got, let's say, a 1%, 1,700 quid. This way they might get 2,400, you know, so they've made a bit more. So it works for everyone, it works for us, the vendor gets what they want, and then also the estate agent gets a bit more. So I'll print this off and sign it now. Thank you for taking the time out of your day to come and speak to me, I do appreciate it. And obviously for the call yesterday as well, and ultimately I suppose this call is just to get to know each other even more and see if what I can do, the service that I offer can benefit you. I know that you mentioned that you're looking to get into potentially buy-to-lets as well as maybe HMOs at some point.
Yes.
You're based down in Slough, if I remember correctly.
What about it?
You're based down south in Slough.
In Slough, yeah.
Yeah, that's it. So what I'll do is I'll run through a map of Greater Manchester, which basically details all the different areas where I like to invest and the reasons why. And then I've also got a couple of properties which is very similar to what I can find for you, should you wish to sign up. So as you know, I specialise within buy-to-lets, so I can show you a couple of example properties which I've one found for a client, and then one which I've purchased myself as well.
Okay, I'm here now.
No problem.
I managed to connect my cam.
Excellent.
Can you see me?
Yeah, all good, all good.
Okay.
Excellent. All right, I'll just share my screen.
Sure.
You let me know once you can see it.
Yeah.
So
I can see, yes.
Yeah, so this here, I'll just zoom out a bit at the minute. This is Greater Manchester over here with all the colours.
Yeah.
Based in the northwest. Now, one thing which I will add, it includes Warrington. The only reason that's not part of Greater Manchester technically, it's just to the outskirts of it. But I've got a property investment there myself, and I also source properties there. That's why it's on this this Google My Maps. Now, you've got Manchester, which is a bit more centralised, shall we say, on this map. I'll just zoom in a bit more. Can you see where I'm moving my mouse there?
Yeah, I can see.
Yeah, so you've got Manchester, which is all the M postcodes. But then in Greater Manchester, you've got all the other postcodes surrounding it. So you've got Bolton, you've got Wigan, obviously not Warrington, but it's on this map. You've got Rochdale, Oldham, Stockport. So you've got all of Greater Manchester on this map. And what I've done is I've broken it down into 3 different colour codes. So you've got green, which is the more affluent areas, the ones which have appreciated a bit more. And if you was to go onto Rightmove, for example, it would reflect that in the property price. You've got the yellow, which are the average areas. Got some regeneration going on in there, which is still good investment areas. And then you've got the red ones, which personally I would avoid. So there's reasons behind that. Obviously there's different colour codes, but I'll just click on one now, for example. So you've got the M25 postcode, which is Prestwich. I know this area relatively well. I'll just zoom in a bit. So can you see these statistics on the left hand side? I'll just zoom in a bit more.
14%.
Yeah, that's it. So that tells you about what type of properties are in there. So you've got detached, predominantly semi-detached, terrace and flats. So that's an average array. You'd like to see maybe more detached and more terrace, so it's a bit more of an even spread. You've got a 70% owner-occupier rate, so that's relatively high. That means that 70% of the people that live there own their own house, whether it's through mortgage or through cash. So what that means is that if you're buying in an area like that, there's obviously going to be a reduced amount of properties for sale at some point, therefore pushing the property price up more. Now you've got, again, this isn't my opinion, this is taken from Street Checker online. They've categorised workers in that area from 1 to 4. So you've got highest grade, average, skilled and unskilled. Now you've got a bit about the culture in that area that has absolutely zero reflection on whether the area is good or bad. I'd just like to put that in there. It just gives you a bit of an idea of who lives there, that's all. And then you've got a 3.7% unemployment rate, which is lower than the national average, which is at about, I think it's 5%-ish, something like that. So as you can see, it's quite a good area, and if you was to put into Rightmove the M25 postcode, property prices will be relatively expensive compared to some others in and around the area. So if I zoom out here, I'll just reset that and I'll click onto a yellow one, just so then you've got something to compare it to. Here we are. So again, this is the M27 postcode, which is not too far, and it's a relatively good area, to be honest with you as well. I've renovated a property here, as I think it was around 3 or 4 weeks ago for a client. But what you can see here in comparison to the M25 postcode, you've got, again, a similar sort of amount of properties there with regards to semi-detached terrace and flats, and then you've got a 65% owner-occupier rate, so it's slightly lower, not too much lower, it's still a good amount of people who own their own houses. And then you've got a slightly higher amount of unskilled workers, which is a slight step up from the M25 postcode, and then you've got a 4% unemployment rate, which again is lower than the national average. But it's still relatively, as in it's still higher than the previous area which I've just mentioned. So you can see not a bad area, there's quite a bit of regeneration going on in here, and it still makes a good investment. What you don't want to be doing is obviously buying at the top of the purchase price. You want to be buying just before the property prices increase, so then you can catch that wave almost.
Yeah.
Then the third and final one is, let's say, the M8 postcode. I know this relatively well, in and around Cheetham Hill. Obviously, again, we've got a lot more flats. We want to be buying where there's terrace and semi-detached and detached properties preferably. 45% owner-occupier rate, again, lower, and then a 43% unskilled amount of workers. Now, I may add that includes students. So if you're looking at HMOs potentially, this could be an alright area, but for what we're after, this is, we don't really want that. We want people who are owning their own homes residential to try and promote capital appreciation. 60% mixed culture, and a 6.7% unemployment rate. So you can see the unemployment rate has gone really high compared to what it was. So you got those are the different areas. It's a generalised overview. Again, you can get good postcodes within the bad postcodes, and then you can get bad postcodes within the good ones. It's just about spotting those areas and making sure you don't buy in them.
Sure.
So have you got any questions on this?
So these all are in the Manchester area, right?
Yeah, so this covers all of Greater Manchester. The ones towards Rochdale here, which is Greater Manchester, I just need to populate those with information. That's why they're just colour-coded in red.
Sure.
That's all.
No, that's fine, I understand.
Yeah, so this covers all of Greater Manchester.
Okay.
Okay, I'll just stop sharing this, and then I'll get up a couple of properties which we can run through. So, let's have
And what kind of property we do? Buy-to-let only, you said, right?
Say that again, sorry. Yeah, mainly buy-to-lets I do, yeah.
And is it freehold or apartments or how?
So normally the normally either what I call a virtual freehold, which is like 900 plus years left on the leasehold, or a freehold. Semi-detached and terrace properties is what I mainly buy. Properties which are, the reason why we don't buy, say for example, flats, or personally I don't like them, is just because when you come to sell the property, again, you're reducing the amount of people that you can potentially sell it to. If you've got a house, again, you open up the window of the amount of people that you can sell it to. Now, if you've got a terrace and semi-detached, they're always going to be in need of people wanting to buy them. Flats reduces it a bit, you see. Plus, with flats, you've got service charge, which can be extremely high and it can kill the profits.
Yeah.
So if I just click onto this one here. So I'll run you through one which is a bit of a cheaper property, not a bad property, but it's a cheaper property, and then I'll run through the figures with you on it. And also, what I'll add is that if you was to come on board as a client, I would always put you together one of these information packs for every property. So this details all the figures and the area about where it is. So this one has gone to a client. This one has gone to a client. It's currently rented out. but it's good to just show you, because if you want something similar to this, then I can find it for you.
And this one is the house price, 126.
Yeah, that's it. Yeah, that's it. So I'll run through all the figures with you now. So this, we paid £126,000 for it using a mortgage, so a 25% deposit mortgage. When we go through the pack towards the bottom, I'll detail all the figures just in a bit more detail. It's in a bit of a table. Just for now, if you look at these pictures, again, you can see the property is in good condition, but it just needs a bit of a spruce up to bring it to top, as in good condition for the area. So what I always do is a bit of a makeover once we get the keys, just to, 1, reduce maintenance costs, and 2, make it more appealing to tenants. So this one is in the M28 postcode, which is a green area, if you want to refer back to the map. Could do with just a bit of work, and I'll detail what we're going to be doing, or what we did to it a bit further down. We paid 126 for it, and the rental income was a minimum of 825. We actually had a few offers at 850. Now, one thing with regards to the rent is that if I put on this information pack that the rent is going to be, say for example, £850, but it only does 825, which I've never had happen, I will personally pay you the £25 per month, just so then you get exactly what I've said to you. As a bit of a confidence booster almost.
And how that will be the how like £25 you said you will cover up.
Yeah.
How guarantee will be covered up, or nothing going to be issued? Like you're going to sign some paper or something?
If you want to, yes. Normally it's a bit of a gentleman's agreement. I'll be honest with you.
No, it's okay. I'm
yeah.
just asking because I had one property. I have one property, which in the beginning of the year they said lots of promises, and now after 2 years I'm finding the issues about the monthly payments.
Yeah.
And I rent out with the council via agent.
Yeah.
And estate agent is my tenant.
Yeah.
And because I don't want to deal with council and tenants, so
yeah.
I said okay, we will be your tenant and we will take care of everything.
Okay.
But now the second time the payment never come on time, very rare. Always 1, 2, 3 days late.
Yeah.
And the second time they changed the date. They said council has this issue, and this time they said we will break down the rent in the 2 months. We can't pay everything this month.
Right. Okay.
So this kind of issues.
Yeah. So one thing which I may add is that, I don't offer a rent guarantee as such. That's one thing. There's a difference. So I will. Let's say for example, if we put it on the market, and the estate agent, the letting agent thinks it will only do 825, but I think it said 850, I'll make that difference up. But if the tenant doesn't pay, which is a possibility, then I can't cover the full 850. However, what I do offer with the letting agent that I use, for £25 per month if you wanted to, it's a rent guarantee. So that covers the rent should the tenant not pay in full.
Okay, so it's rent guarantee for
yeah.
£25?
Yeah, so that's why it's getting a bit confusing, I suppose. So if you wanted to, the letting agent, they offer a rent guarantee which costs you £25 per month should the tenant ever default.
Yeah.
Where I come in is that if I say it will do 850, but the letting agent only thinks it will do 825, we'll market it at 825 and I will top it up to 850 myself.
Okay.
Yeah. Just to give you, ultimately, what I want to do is the figures I put in front of you, I want to hit those. I don't want to change it, you see, because obviously that's my reputation. And I want you to come back for a repeat customer ultimately.
No, honestly, I want to, make a bigger portfolio.
Yeah.
And that's my plan at the moment.
Yeah, that's it.
I already, plan a lot of things on that.
Yeah.
Like my own plan, like goal and everything. So I want to develop and grow in this. But if I have experience what I had with this current estate agent, that kind of demotivation. And I was telling him to give this house for rent out as well, where I am living now.
Yeah.
I was planning to move in bigger house, but I don't think so. I will go back to him ever now.
Okay.
Because of the communication. So this kind of things. It's not helping me to grow.
Yeah, that's it. And I mean, ultimately, obviously my reputation's on the line, but I've also been through and tried and tested these people I work with. A bit more about the area. Average property price in the M28 has increased by over around £50,000 in the past 3 years. Against we're seeing capital appreciation. That even includes the bit of a dip that we had, with regards to interest rate hikes.
Yeah.
The average property price in Terraced is £227,000. That obviously includes the bigger ones, the new builds, things like that. The average rent is £960 per calendar month. So again, we're at 825, which is a bit less. But again, all my figures are conservative figures. So when I'm putting things together, whether it's a refurb cost, I'll overestimate it. Whether it's the rent, I'll underestimate it. Lots of regeneration schemes going on in the way, such as such as the Worsley Town Centre regeneration scheme. It aims at building new homes, shops and offices and improving public space and pedestrian access. So it's got all the fundamentals to be a good area. This particular property had 64 inquiries within a few days of it being on the market and 27 applications. So the client had a real variety of tenants that he could choose from. And the tenant is moving in there, I think, in the next couple of days.
Okay. And it's sold, this property?
Say that again, sorry?
This property is sold?
Yeah, this one's gone to a client, this one has. Yeah, this is an example of property, yeah.
Okay.
But something like this is what I find on a weekly basis, a daily basis, to be honest with you. I've just secured another property very, very similar to this for a client. Today. I won't go through this. This is just a bit about the benefits of the service and the company that I work for, that I own, I should say. Plus a couple of reviews there on Google. Some comparables. So one sold for 110, but that was in poor condition, needed a full renovation. One sold for 138. This is all within a quarter of a mile. And one sold for 127, which was in good condition. Now, there's one for sale at the minute across the road from this that offers in excess of £160,000. Now, it is slightly bigger, but still that is a huge jump, from 126 up to 160 offers in excess of. And then there was a local rental comparable of 950, but it was a bit bigger. It was a bit of more of a new build as well. But as I mentioned, we got offers in at £850 for this property particularly. So the figures: purchase price 126, 25% deposit. Buying costs, that includes my fees, solicitor fees and mortgage broker fees. So there's no hidden costs, everything's detailed in this pack. Stamp duty 3%.
What about if the mortgage broker is mine?
Yeah, that's fine. As in, if you just let me know the cost, I can put that into here. So then that is factored into your return on investment. That's all I need to know. And if you do want to use your own mortgage broker or solicitor, again, I'm more than happy to do that.
Oh.
Yeah.
Okay, this is just a rough idea, right?
Yeah, that's it. This is for this property specifically. This is how much he spent specifically on this property. Hello?
Yeah.
Sorry about that, I broke up. Yeah. So on this one particularly, that's how much he spent on my fees, mortgage broker fees and solicitor fees.
And what is the refurb and other cost?
So that's just the refurb. So it says other costs. So sometimes I buy a property from auction, very rarely happens, and sometimes they have their own associated costs. But for this one, the refurb was £4,000. And then I'll go down into detail just a bit further down as to what we spent the money on. So the total amount of cash the amount of cash that was required was 44,880 for this property specifically.
Yeah.
Total project costs, you don't really need to take that into consideration. That's if you was to be buying it cash. Yeah, you still with me there, Amit? Hello?
Yeah, I'm with you, sir.
Sorry, yeah, no problem. The total project cost, if you was to buy the property cash, that is the 139,000, which in this case he didn't. It's just in there for reference. Gross rental income, £825 times that by 12, 9,900. His net rental income is 309, so that's after mortgage fees, maintenance fees and management fees. So I include a maintenance fee in there. And this was at a 5% mortgage interest rate, which he actually reduced this to around, I think it was 4.8 by the time it completed, which is what we're looking at now roughly for buy-to-let investments. So he could be making, on an average month, if there's no maintenance issues, around £370. And that's pretty passive as well. It's as passive as you can possibly get with a buy-to-let in property. Return on investment. Sorry?
How quick is it go on a rent?
So this
put in the market?
Yeah, so we put this one on the market and within 3 days we had 64 inquiries.
Oh wow.
Yeah, so we had 27 applications after the block viewings. So it went, there was no issue. This one was particularly good. I'll be honest, you don't always get that. This one was particularly good, but it was gone before well, after a few days I should say. The next one I show you, this one was actually gone before it even was on the market. The next one that we'll run through. So if you was to do capital growth at 4% per annum, which is as a numerical figure is 5,670. So to get these return on investment figures, do you know the calculation? I'd just like to run through it with people just so then they understand the pack fully.
Return on cash employed.
Yeah, so that's return on investment or return on cash employed. So the amount of money that you'll make per year divided by your initial investment times 100, that gives you the percentage. So if you was to work this out as a capital growth percentage, so 5,670 divided by your initial investment gives you 12.63%. So if you was to add those two together, you get 20% return on investment combined across capital.
Every year.
Yeah, across capital growth and also rental income. Yeah.
Okay.
That's it.
So how we calculating the capital growth, like the property value is going up that much?
That's it. Yeah. So of course, property isn't like a linear line. It doesn't just go up. Yeah. So the way I've calculated it is that this is very, very conservative, especially for the area. So over the past 3 years, the average property price has increased by £50,000 roughly, from 220 to 265, something like that, 270. Plus the average property price over the past 10 years in the UK has risen by, I think it's 67.8%, which is around 6.7% per year. So we're working this out at 4%, which is lower than than what that is. So this is actually, on a good year, especially when COVID was around, this could be up at 7%, which massively increases this figure here.
Okay. And how quick we can resell it?
Do you mean sell the property or rent it out?
Sell it in case something happens and I need the money.
Again, I would say it's difficult to say that, but normally in an area like this, if you was to put this property back on the market, you could probably sell it, I reckon, within a month. It depends on the price. If you wanted to get a bit more, or and obviously then you've got the conveyancing. Yeah, it depends on how you price it, and it depends on, obviously there's multiple factors in. Let's say if you wanted to sell it 12 months down the line, I'm not sure what the property market will be like. I think it will be good, but you never know. But the ultimate aim will be, in 2 years' time, if we renew our mortgage, we'll be able to refinance and pull a lot of our money back out again to reinvest.
Okay. And that will be, if I invest with my company name.
Yeah, that's fine.
And that will become as a commercial, or it still will?
No, so it'll still be a residential. It'll just be owned within a company. So an SPV, they call it. Special Purpose Vehicle. So that company that you set up is made to just buy investment properties, whether it's residential or commercial.
Okay.
That's fine.
Okay.
And then the refurbishment costs, we spent £4,000 in total. We updated the laminate in the kitchen, did some decoration upstairs, gas safety certificate, that's a legal requirement, as well as an EICR, an electrical inspection condition report, and we just upgraded the consumer unit. So the electrical box, you see, just wasn't up to current regulations, so we upgraded that, got an electrical safety certificate, installed some new PVC windows. They was wooden, they was just a bit dated, that's all. And then we cleaned it, and then we gave the client an option of putting in a new back door. There was nothing wrong with it, it was just a bit dated, that's all. Which he went for.
And that cost 4,000.
That's it, yeah, that's it. So one thing which I'll mention with regards to the refurbishment is that I own a building / renovation company. So when it comes to the refurbishment side of things, all you need to do, of course you can go and get quotes from elsewhere, I'm more than happy for that, but what it can mean is that you only need to speak to me and I can sort it all out for you.
Okay.
To try and create the most smooth as possible process.
Yeah, okay.
Okay, do you want me to run through another one quickly?
Yeah, you can go.
Yeah, okay, I'll just stop sharing the screen. So.
And you do HMO as well, or you don't?
No, I don't do HMOs as well. Unfortunately.
Any specific reason?
I've built my own property portfolio up on buy-to-lets.
Okay.
I help others do that, and I don't want to become a jack of all trades and a master of none. I really know buy-to-lets inside out. I've been doing it for years now, and it served me well, and it also served my clients well. So if I were to go into HMOs, I don't want to spread myself too thin. We've just got a lot going on at the minute with other things, you see. Eventually, I'm not too sure.
Yeah, okay. Sure.
Let's have a look here. Where is it? What's the road? This one's a bit of a bigger property, a bit more of an expensive one. So it was £144,000 purchase price. We paid mortgage purchase, again 25%. This is actually not too far from where my office is, in the M46 postcode, which is a yellow area, if you remember back to the map.
Yeah.
Excuse me. So you've got a few pictures. As you can see, it's in good condition. We still just spent a bit on it. There was a couple of areas which we just needed to improve, but the pictures don't really do it justice in that respect. So £144,000. The rental income was £925. This one was rented before he actually got the keys. So the letting agent knew somebody in the area who was willing to pay this price for this property, and she secured it straight away before we even got the keys.
Wow, okay.
A bit about the area itself: 3-bedroom semi, again making it ideal for a family. 6 minutes away from the nearest train station. It just needs a light refurbishment to bring up to the highest standard. Again, like to see the schools in the area. The M46 postcode has increased by 12.7% in the past 12 months compared to the national average of 7.6. So obviously, I factor in my capital appreciation at 4%. The past 12 months of this area was 12.7%. This was towards the start of the year, so obviously that's for the year prior. Average property price of a semi-detached is £195,000, and then the rents have also risen by 7%. And then there's also some regeneration schemes going on again. So you're starting to see that the fundamentals for the area are quite good. I won't go through benefits of our service. Some comparables. So we've got one here, 138, which was in okay condition, one which needed a full renovation for 125, and then one which was in good condition, which sold for 165. Now there was one which sold recently over the road, which needed a bit more work, through the same estate agent for, I think it was 157. So instantly we've built up a lot of equity just buying it at the right price.
Okay.
Which gives us options in the future. And then a local rental comparable, again, 1,095, and there was only 2 3-bed semi-detached properties, that should say, for rent in the M46 postcode. So in the whole of the M46 postcode there was only 2 semi-detached properties for rent. Again, if you're putting one on there, you're going to have a pick of a lot of people. We managed to secure this one before it even made it to the market. The figures: 25% deposit, buying costs, my fees, solicitor fees, mortgage broker fees, stamp duty, refurb at 3,000. So the total cash in was 48, so slightly more expensive. Total project cost if you was to buy in at cash, which you didn't. 925 on the rent, 291. Again, I actually factored this mortgage interest rate in at 5.25%, which is a drastic difference. So his figures now will be getting closer towards 360, 370 per calendar month, and that also includes the maintenance fee and things like that, and management fee.
And net income is calculated without our tax, right?
Yeah, that's it. The thing is, with regards to tax, what you can do is, as in obviously, you need to pay the tax, of course, but let's say you spent a bit, say for example on this property, you spent £3,000 on the refurbishment to just bring it up to top standard.
Yeah.
That is a cost, which you can take off your tax bill. So you may have some issues moving forward with a property, say for example, which you can offset against your income tax. Especially with it being within a limited company, because the limited company is almost like its own person compared to personal name. If it was in your own personal name, then that's when the taxman really does come after you, because you're getting taxed potentially at 40% if you're in the higher rate tax bracket.
Yeah.
7.17% return on investment, 4.5% capital appreciation in this area, which again is lower than I think the 12.7% we mentioned. As a figure, 6,480, return on capital growth percentage 13.3, and then a combined return on cash for 20.47%. That's year on year. If it was at 12.7%, can't get that out of my mouth, then that would obviously be a lot higher. I'm not saying that it's appreciated that much, but it's still a good return on investment overall. Then this is what we spent the money on. So paint touch up, plaster in the chimney, some new skirting boards around the chimney, decorating, gas safe, an EICR report and a garden tidy up. And he spent, I think the actual quote was 2,700, so slightly less.
Okay.
Any questions on this property?
No.
No?
No.
No problem at all.
How come the boiler is not there? Or no service? Okay, no service.
Central heating system. So that, so it doesn't need, so if you wanted to, we could service it. What normally happens on the gas safety certificate, he services it anyway.
Yeah.
And
how big the area, carpet area?
The actual square meterage of this property, it was around, I think it was 84, 85. It was an alright sized property, relatively big. 3 bedroom, semi-detached.
3 bedroom, yeah.
Yeah, semi-detached, in a decent area. That's it.
Okay.
So these properties are very similar to what I could find for you. I find these, as I've mentioned, day in, day out. They don't take me too long to find, normally around 2 to 3 weeks, and I work on a bespoke basis. So I will go out there and find the property for you instead of just sending it out on a mailing list. What are your thoughts so far? I know that you've obviously been thinking about other things, potentially.
Yeah.
So it'd be good to just, I suppose, discuss those and see if I can help you.
Yeah, no, the price wise is really good because I'm looking for, I want to start from the less price, and also I don't want to put all money in a big house like 300, 400,000.
Of course, yeah, that doesn't make any sense to do that.
In case anything happens, so I have option to sell one house and I can keep 2, something like this.
Yeah.
So,
of course.
So the price wise is good. Other thing is good is mortgage. I can get 25%, which is good as well.
Yeah.
And the important part, I'm living too far from that area, Manchester.
Yeah.
So the maintained and managed by someone, that's good as well.
Yeah.
So
that's it. Of course. I mean that's. I think some people think obviously they're investing far away from the area. How they're going to manage it. But ultimately, if you was to invest closer to yourself, what you'll find yourself doing is managing it more yourself. Whereas with it being in an area which is not close to yourself, I would just do all of the managing and of the maintenance and working with the letting agent. A lot of my clients have never seen the property that they've bought. Obviously, they know what it is, they know all the figures on it, and they're getting that return on investment. But they really want to save as much time as possible, and that's why they employ someone like myself to do it.
Yeah. So no, that's because I have property, the second property, buy to let one. I never been there.
Yeah.
Last 2 years, and I can see from my window.
Yeah. Can you?
That close.
Right.
So I am like this person. I don't like to bother anyone. Everything is okay, then it's fine. But the only problem is now coming rent, not coming on time.
Yeah.
So that's bothering me now.
Yeah.
Otherwise, I never disturb anyone. It's okay. I feel like what will be the damage? If it's any damage, maybe £500,000, and if I am earning 5 years from that person, it's okay. I shouldn't worry that much.
Yeah, that's it. And one thing with regards to HMOs, I know that you may be slightly concerned, and I'm not saying that HMO is a bad strategy, by the way. It is good. It's got its benefits. But you've got to manage, or whoever has got to manage 6 people, for example, paying the rent instead of just 1.
Yeah.
So you've got an added complexity there of not just 1 tenant. You've got 6 tenants per property. And what happens if 1 tenant moves out, or even potentially 2 tenants moves out? You will be making less than a buy-to-let. If not, you could potentially be losing money. Now, there is obviously the flip side to buy-to-let. Yes, you've got downsides to it. But with regards to the constant income and security of it, it's a lot higher, I would say, in my own opinion, than a HMO. That's why I like it, and it's certainly the most passive way of property investing, I think.
No,
and I mean,
agree with this one.
Yeah, it would be great to get you signed up as a client. If you're happy to do so, I don't know your thoughts. I'm just trying to gauge where you're up to. That's all.
Okay, no, I will have a look. My bank survey tomorrow. And I'm going with the process for remortgaging this current house as well. So I'm raising some capital too. So this whole process going on. I'm hoping to get all things done by next week. And then I will review all this, what I received and what you explained as well. So everything I will go through and I will come with my next step. And like this property, I was just looking what tax I will pay. I will pay, no, it is a company name.
You don't, how do you mean taxes in corporation tax?
No, not tax, sorry. Yeah, tax like the income tax.
Yeah, so it'd be 19%, wouldn't it, on a corporation tax, I think?
Oh, 19%?
Yeah, on a company like this.
A company, so how, if it's more than what any slot, like any block, with how the 19% work?
Yeah, so say for example, are you setting up a new company? Yeah. So it depends on what your turnover is and how much profit you make. But with these buy-to-lets and potentially HMOs, you're not going to be making an earth-shattering amount of money. So therefore you would fit into the lower percentage tax bracket, and that company is taxed at corporation tax, which is at 19%, which is what my investments get taxed at. Now if you wanted to take some money out of the company, I suppose if you're putting in, say for example, £50,000, that means that your director's loan into the company, you can get that tax free because you've loaned it to the company. So you can take the £50,000 out whenever it's made £50,000 tax free. Now let's say you've eaten up that £50,000 and you're just paying, say you want to start taking some money from your company, then you would then be subject to income tax on yourself. But the key with buy-to-lets and property investing is, if you can, leave the money in there to try and buy some more. And then 2, take it out when you're going to be at the most tax efficient. So say for example, if you want to reduce your working hours, or if you want to save it until you're retiring, for example. If you then reduce your income tax, you will then not pay 40% on it, you'll just pay your own income tax on it.
Okay, then I can withdraw and use it.
Yeah, that's it, unless you really want it, but you can take up to your director's loan anyway, back out tax free.
Okay, it's a loan. And like if I keep the money in my bank account and I don't take money out, then it's no tax. Yeah,
you'll get so the company will be taxed at corporation tax, but you won't be taxed as a person. You won't be taxed.
Okay.
It won't go on to your tax bill. It will just be, think of the company as a new person. That's the only way I describe it to people. It's like this new person will be taxed on its own.
Okay. I need to understand more, but a little bit I know now.
Yeah.
So, okay.
That's it. There's one thing which I will mention is that property investment isn't fast. So if you are thinking about doing it, and I'm not saying this from a standpoint as in sign up to me, even if you go to somebody else for example, but property isn't fast. It takes months to buy a property. So the sooner you start looking, and the sooner you actually get an offer in, you could actually time it so when your remortgage comes in, then you pay your deposit on the property.
Yeah.
One thing which I suppose I might as well run through with you quickly whilst you're on the call, just so then you've got a good idea of it. I'll just document. So this is what we call a hands-free reservation template, which would need to be filled in by us both, but signed by yourself ultimately. This is what details what I will be finding for you. So it's hands-free reservation template for the company. So you've got a lot of legal jargon in here, especially on the second page, which I would send over to you to have a read through. I wouldn't expect you to sign it straight away, of course not. But what we're really looking at, this will detail what I will do for you, and then a bit more in this section here about what I will be doing for you and where the money will be held, etc. So this is what we would need to fill in. So this details the return on capital employed for rental income alone. So that 7% basically means that you'll be making a decent amount of money per month after all the bills. So that's basically on to me. A 2 or 3 bed terraced or semi-detached, preferably a 3 bed if you wanted to. Good capital appreciation, ongoing regeneration schemes and good transport links. Now this is as flexible as you want it to be. So if you wanted to, you could put in here a requirement that you have, and it basically means the properties that I go out and find for you will have to match this target criteria.
Okay.
And any comments and conditions, that doesn't normally get filled in. It's got your signature there.
Thank you very much for having us today, Wilson. It's been really, really good.
No problem at all. Thank you for coming up. it's been a good day.
Yeah, it's been good fun, hasn't it?
Yeah, it has, yeah.
So if anyone wants to get in touch with yourself with regards to investing or in Greater Manchester, how do they get in touch with yourself?
So there's a couple of different ways. First one, my website, www.parkereckersley.co.uk. My Instagram is Wilson_Parker_properties. And then I've also got Facebook, just my personal Facebook, Wilson Parker. There's not many people called Wilson, so I'm sure you'll be able to find me out there somewhere.
That's it. And if anyone wants to just run through the same as what you've just shown, that investment there, you're more than happy to run through all the figures and everything like that,
definitely.
case studies that you've done.
Yeah, if you're looking to invest in Greater Manchester, mainly in buy-to-lets, then reach out. I can run you through the presentation which I've just been through, highlight the good areas, the bad areas, and a couple of case studies.
Thanks for watching today, guys. If you want to see more of this content, whether it be day in the lives or just other property content, make sure to press like and subscribe, and we'll see you next time.